So you can see the trend is written the whole time. Like that, this is not, and there's a small break there and a back test up of that next trend. And in this moment, you can see where it's about to break up. And then you have the final trend, right? So even in this moment, you would have, get really crazy with this. And you would have, what do we have right here? Local trend against the inverse distribution, right? Right there, which would back connect. Boy, I drew that wrong. Okay, that's okay. Which would back connect something like this. Right? And then you break over that, and you're breaking over those couple trends at the same time, and you've broken over the inverse to now back attack something else. Like you can see the succession in this move and why it happens, right? So even this distribution channel that's forced distribution against this inverse wedge here that you're creating even has its own local part of the move, where when you break that local part of the move off the back trend support, zoom into here and get really silly with it, and then look how much this thing moves up, because it's breaking all of these trends that happened over here, all these people who are breaking these trends, it's breaking it on a local time sense right there. So this is like the same thing as Oaks that we saw yesterday on Oaks, where we looked at, okay, a local time frame is breaking into a larger part of the move. This orange is like, look at where, or let's color this one differently. Let's color this one. Let's go with the yellow for this example, but let's go with like a bright yellow. That's kind of weird, that one. Let's go really thick. Yeah, there, exactly. But like, look at the trend this is breaking, right? So this is breaking basically all of these trends in one moment, off of failed accumulation, off an inverse hold, off of a local break. So yeah, it becomes very, very obvious in one way, but not so obvious in another way. When we were looking at, I think, like a maybe 7 or 8 week spread of candles in a small time frame like this, like this one would be relevant in the future up here had we slowly moved up. And if this one had gone down a little bit more, and this one was the distribution candle, this is the one you'd pin it to in a case where this has moved up for weeks and weeks and weeks. So it would show you a more accurate trend line over a long period of time. But in this move, this is such a short time period that it's just, this candle creates this right here. And this is the correct, but this is only correct because on smaller time frames, this executed the same rules. Based off of this candle. So you see what I mean? Like you have to kind of get a flavor for it, and you'll see it. Like you'll start to look at time frames and you'll be like, okay, just subconsciously you'll just draw certain lines because you're so used to seeing the fractal without seeing it. So that's fractally important information. You are now breaking down the cycles in the micro time, since we looked at cycles in less than one. So when you're looking at a larger time frame, something like this, the daily, and you're starting to see where and let's just remove this. You're starting to look at the daily areas, right? Something like this, right? So this is a cycle that's breaking. Like what we did is we dissected this cycle, right? So this break right here, like we have these trend lines that people, like with Skycoin, for example, it's like, oh man, we're about to moon, we're breaking trend, right? And then you see this moment happening in the moment, and like you could simply draw this one line, but there's 1,000 things that are happening to get to this area here. Before that, there's a ton of things that are happening. That all this ends up being is this. That's all we just looked at that, which was also oh, Magneto, why do you do this? Which is that part of the candle that we just dissected right now, right? Oops. So you see these accumulation and distribution cycles. This is the advancement to accumulation and distribution cycles. This is not how you see, okay, accumulation and distribution. That's important. Like accumulation and distribution cycles, it's important to know where the next swing is going to go to, and where these moves go up like that. But this is breaking down the events leading up to the test of that accumulation and distribution zone. So when you are looking at accumulation and distribution, you could have just simply said, right, okay, this is trying to establish the hold of the move wherever it is in here. I guess it was dictated somewhere in here in this move, all-time low, which would have been the backside of trend here, which would have given you that bottoming up head. You could have just simply said, this is distribution 1, number 2 happened to back attack 3, which is this valley back here, which is all still very true. Like if you were to draw this level here now, and you were to go forward in this move, you would probably see it play out very nicely, right? You would see, come on. You would see that happen. And then what would you have? You would have this trend here, right? So look at what you're looking at right now. Right, and then all of these have arraying trends inside of them that are showing you the exact moment, right? And then this here is being affected to this here, and this is just showing you the larger distribution cycle. See, and then that moves up, and then you would have done this. You see, so it is all this. It is both relevant. See how you fall against that? Break up, and then you have this right here. Right? So these are all arraying off of each other, and we don't need to change the color of that because this would be pink to that green to this purple kind of thing. So accumulation distribution cycles are still extremely relevant. This is not the replacement of them. Rather, this is the microanalyzation when we are in markets like MDA, for example, right now, and we are trying to microanalyze what is happening down here and where the correct buy becomes, and where the exact moment to get into a coin and to see how distribution ends, because you can simply just mark excuse me, you can simply just go and do this. Swing to swing, I'm going to buy this. Sure, you could do that, and that's a very different type of trade. This is more of like a position trade, right, where you just mark these bigger swings and you just buy and you just hope it goes well, right? But that's not really day trading. That's more investing. Not even investing. It's position trading, right? It's not even swing trading. It's position trading because you're just simply marking. But if you don't know what you're marking, it's kind of like, well, when the failure happens and you didn't see it, like expect to be in failure. So yeah, you can simply mark the larger trends like that, but I don't really think that's beneficial. It's like this right now. You could just simply mark one large trend, but to understand all the other pieces of the chart that's happening is more important, because you need to see where local breaks are. You need to see where global breaks are. This will lead you to those big moves. These I want to say that trends are tough. Trends are not easy because trends are kind of the fuel to a move. And when you're talking about the fuel to a move, there is a big decision that has to be made. So when you look at trend, there is large decisions that get made based on trend breaks, whether to buy, whether it makes sense to buy, and then that leads to big moves. And we see it all the time. Like, pick a coin that has already moved and you will find a trend that it broke to attack the level, and you will be able to explain the why, right? Even just go back to Oaks the other day. Like, you can explain the why, but realize that trends are not easy. This is not a simple task of, hey, let's draw one line, see what that line does, and then just buy it because a line is breaking. Like, that is a very superficial way to look at trends. You have to realize there's backsides of trends. There's, every time you see this backside of trend, realize that this happened because there's a trend that failed here. Realize that this broke down because of a trend that failed higher. There are so many trends happening on your charts at all time frames. It's crazy. But this point to this point, in an event of failure, which is right here, you will see that back test the next, like this would be the valley right here, and this would be the larger valley, and that would be the inverse level. So the inverse level is right here. You can see the inverse was touched, which is telling you that the chart is moving down, which you're going to back by the trend, which is giving you your next inverse level, which was also rejected against the larger trend, which is automatic rejection against the valley because you're being trend compressed, which is now going to show you the next leg down of the move, which is probably going to be something more globally relevant. Maybe this swing to this swing right here. So you see swing low to swing low, and it gets hit. So I just want people to see that just because a trend is breaking up doesn't mean it's time to buy. And this is a quick little example where you can see there's other stuff happening on charts. There's break levels, there's hold levels, there's inverse levels, there's what side of the chart. If you're being confused and you can't find it, the first thing I want you to do is flip your chart and look for it and master one side. Flip your chart, Alt I is the hotkey, master one side, and then find the reason why find the explanation so that you don't make the same mistake in the future, because it can be explained. There is a science to this stuff. It is as clear as water is. Well, water is not blue, I guess. Water is clear. So it's as clear as water. I don't want to say it's clear as blue water. That's the wrong thing to say. Okay, anyways, moving on. You'll find the reason if you know what to look for, and then you'll see where your mistakes are, and you'll see where automatic failure happens. You'll see where automatic success happens. So just remember, trend is your friend, but also it is it's a very cliche saying, but if you understand trend, it's like the rocket fuel to anything. You understand trend. If you become a master of trend, you basically just bought a new house or a new car or whatever you want. I don't care. You bought the honey roasted peanuts, not the dry peanuts in the bag, right? You got the nice peanuts in the grocery store. You don't have to buy the no name cereal anymore. You can buy the brand name cereal. Like, this point being is that if you understand trend, but don't let it defeat you, because it is a very complex thing. It is a lot harder than inverse levels. It is a lot harder than break and hold levels. Break and hold levels are easy. Break and hold levels are finding the values, marking them, and understanding that one compresses a move, one supports a move. Trend is another beast.
Hey everyone, how's it going? As you know, I'm now giving out some of this content for free that I was otherwise charging for the past little while. Yeah, drop a donation, subscribe to the channel, join Patreon. You'll get access to Discord. Great way. Lots of top level traders in there, people who are doing this for a career every single day. So go to Patreon, join a tier, get access to Discord. Go on Reddit, talk about future of trading, talk about the science of trading, talk about cotton candy, socials, everything you can. Let's help this thing grow. It's the way you guys can thank me for giving out this content for free that I was otherwise charging money for. So I'll leave a Bitcoin address on the screen. I'll leave the Patreon address on the screen. Just do something to help out. Okay, thanks guys. Take care.